Today, I trust you're all well. Just got to switch on my YouTube. I have been requested to keep an eye on it, just in case the questions coming up. All right. Thanks for hosting, Marlon. Appreciate it. All right, guys. I thought I'll just look quickly at DAX 30, and there's something that I want to show, which I think you might find interesting as far as this market is concerned. The DAX 30 or DAX 40, depending on what your broker has got, is a good representation of not just the German market, of course, it's a German index, right? But of the European economy, German being such an influential market in that zone. So I've started trading this quite actively. If you go back and look at your charts intraday, 5 minute, 15 minutes, you will notice that this market tends to have big candles, but also if you're in a trading range, you look at it and say, oh my goodness, this market has just been a trading range. How am I supposed to have traded this? Well, if you dig into it, you will find more often than not that each day presents you with several trends, which means it doesn't matter which session you trade. Ooh, I'm looking at my YouTube. That looks horrible. I'm not sure why, probably my network. That means whichever session you trade, you should be able to find opportunities. And depending where you're sitting, if you can trade through several sessions, then you'll have opportunity to make reasonable cash as the day unfolds. Or if you lose in the morning session, you can make money in the later part or in the US session. Now, this particular day, 21 August, you see this candle here, the one in yellow, that was the open of Frankfurt, the European market, German exchange. This one was the open of the UK markets. This one here was the open of the New York Stock Exchange. Wow, I'm hoping that the guys on YouTube can see clear. I'm looking at mine, it just is a blur, so I'm not sure where that is. But in any case, we had 3 trends in the day. So in the Asian market, actually, I probably could have called it 4 trends, right? My apologies, I started at almost 5 a.m. on MT4. So, I cut out what was taking place in the Asian session, but into this before the open of the German exchange, we had a trading range, a bit of a base sell-off, and then to the open of the UK markets, bull trend. Then we went through a bit of a range during the day, and the market created a trend reversal. Now, there's many ways to find opportunities for trend to jump into the trend reversal. So it's a trading range, and the market could keep on going up, of course. It doesn't mean anytime you see a trading range, it's going to reverse. It's an alert that the market might possibly reverse. And then we sold off. This candle here is the US Open. So we sold off a couple of hours before the US Open. US opened and we carried on, selling off. So now we are into the US market. We are into the latter part of the day as far as the European markets are concerned. We entered into another trading range, which is a way to look at this in terms of trying to find if the market is going to reverse or continue carrying on. And then we went into a bull trend throughout the second part of the US session. So if you go in and look at this market, you will find this kind of opportunities. The reason I'm emphasizing this is that it doesn't matter, even if you trade the 5 minute, if you miss out trades here, okay, or if you've lost some money here, if you're still going to come back in, just come in calmly and say, well, what's the market doing? Where am I? Because you can identify where the market is doing and where you are. You'll have opportunities. Even in here, you could have picked up a couple of trades. Okay. Or you come in, this is before the US markets, bit of a bear trend. And if you trade in through the US markets, you wait for the US markets to open, and it might have been a little bit difficult to jump in here. I've only marked cleaner entries. I know one of my clients are scalps, so you would have found ways to jump into the market a little bit earlier on. So you let the US open, find opportunities, or if you don't take any of those trades later on, you can find trades in the market. Now, let's go through some of these. So this was the German Open. Just before the open, market tried 3 times. Bears tried to sell off and accelerate down, and they ended up creating 3 push pattern, which is a wedge pattern, right, into the open. So at this point, if you'd come in and looked at this and said, oh my goodness, the bears are strong, they're going to accelerate down. If that was your thinking, and you want to jump into the market, some guys would sell the close. Like I was telling an example of my client who is a scalper. He would sell the close, it turns, he says, oops, let me get out and get stopped out. But that's the way he trades. If you don't trade that way, you wait. That's a breakout candle. Wait to get confirmation. And if you get confirmation, then you can then decide which way to go. But immediately it fails. Now, if you're going to be trading this market here, the German 30, you got to be aware of the time that the UK market opens, because that, if you look at chart after chart, will bring in significant price action one way or the other. It might be a bull candle, it might be a bear candle, might fail, because remember, there's guys who are trading the open of this UK market. So whatever you're doing in here, either you try and take a quick profit if you can, or if you've taken it and you hold on to it and hoping that at the open there's acceleration in your direction. Okay, so in here, bulls broke out, breakout, pull back. There, if you're able to take a quick profit when it starts to reverse, you could have done that. Or, and this is quite frustrating for most traders, if you're taking that trade, sometimes I put the stop there, but I know I'm going to get stopped out quite often. Okay, so and I don't have, this is quite funny, I don't have a problem getting stopped out quite often early in the day, because I still got the rest of the day to make up any losses. Okay, so if I'm taking that, I think maybe there might be acceleration, I can do that. But the proper place when I hold it is down here. So if you're taking that and say, okay, I'm not going to take a quick profit, I'm going to wait, I'm going to take my chances and see what happens at the open of the UK markets, you would not have been stopped out. In any case, one thing I want to just kind of highlight here, if you didn't take that and you saw that, now this is interesting. If you are just trading the UK markets and you open, get your charts 5 minutes before the market opened, and you see a big bull candle, chances are you're not going to want to jump into that particular thing, because you're saying, okay, first candle, let me wait and see other opportunities. But if you had been looking at the German market and you had seen all of this, you would have said, well, that big bull candle is a confirmation of the pattern I'd seen before. Even if you had taken that and got stopped out, or you just taken it and held it there, when you see that, it's a chance to get into the market fresh or to add on to a position. Okay, now that's with you bearing in mind the German market. If not, you wait. There is another opportunity to have jumped in when you're taking that trade. That's a breakout pullback. Your stop is going to be down here at the very least. Okay, that's a pretty aggressive stop, or all the way down here. Now, if we just look at the structure of this market, look at that breakout, a pullback, and that entry there is almost the same as that breakout, the pullback, and that entry there. So again, you put in your stop here, just put beneath the bull candle, expecting that you can get stopped out. It's possible that you get stopped out, or like we said here, or you put your stop down here and hold it. Then, if you're scalping, as scalpers do, you jump in and find other opportunities to get into the market. Another opportunity would have been here. I want to jump to the US session. So the point here, I think that I'm trying to emphasize, I'm looking at the DAX 30, so more and more we will be looking at this market. But the point to just to highlight here, if you're going to be trading this market from the open of the European exchange, just be aware when the exchange opens, patterns before, be aware of the UK market opening up soon. Just having a quick squeeze at the DAX 30 now. It's kind of moving in that direction, which is interesting. Bears taking control of that market. So this took probably 2-3 hours. So, if you banked or if you're at work or whatever, and you're coming back to look at the market, you've got to try and do that analysis. So you get a sense, you don't have to try and find all the entries, get a sense of where we're at, double top. There's a little wedge top here. We had a wedge bottom here, 1, 2, 3. Now we have a wedge top, 1, 2, 3 up here. And the bear sold off, breakout, pullback. That's a first trade you could take, or you wait for that confirmed breakout, pullback. This trade here is exactly the same as that trade. Big breakout, pullback, opportunity to go long again, big breakout, pullback, opportunity to go short again. So you could take that, same thing, take that particular trade. Now, when I get to the open of the US market, which is what I want to emphasize, it's almost the same thing as here. Just be aware that you can get all kinds of drama as the US markets open. And that's perfectly fine. So if you're trailing your stop, keep your stop high. If you see a reversals forming and you want to get out, you can get out, because the market could just keep going up and still sell off. But that's an open, and open is like news and whatever the things that might be taking place. So just bear that in mind. And as soon as that's closed, 2-3 candles afterwards, you start to say, oh, okay, we just bounced off this thick blue line, which is the 10 EMA. So the bears are pretty strong. If you look this side, market stayed above the thick blue line until we broke through it once and then went sideways. Here we stayed beneath the thick blue line, which is the 10 EMA, and the market carried on going sideways until we got to a reversal. This reversal structure is what we call a major trend reversal. End of a trend, number one. Bulls try to break, or they do break it. Number two, bears try to resume the third time. Number three, fourth time, bulls try to accelerate up, and the bears come in for the fifth attempt, and then they fail. Then you can start to find ways to jump into the market. Here, it was we broke beneath the 10 EMA. Then the bulls tried to resume. They had that wedge pullback, which failed, and eventually the market sold off. So quite a few things that I've put in there, which you can have a look at in your own time, and hopefully it will be useful to you. Where we are presently with just before we go. Okay, so the bears are selling off, and I'm okay with that. Took a short here, I took a short here, and we'll see. And of course, I want the market just to keep going down and down, but we'll see how far that got in. I don't have time. I got stopped out a couple of times earlier on as this was forming, so quite frustrating. So hoping that the sell-off carries on quite dramatically. And let's have a look if there are any questions. And if there are questions, we'll be able to answer them quickly. All right, I don't see any questions. And thank you very much all for participating. Live Trading Profits, German 30, that's what we focus on. We will catch up soon. Take care, guys. Appreciate it. Yes, sorry, question, Edmund. I'm using the thick blue line is a 10 EMA. I use that as an indicator of the strength of a trend. That's a 10 EMA. The lighter blue one is a 20 EMA. Okay, so that's what I've got there. I don't have a 5 EMA. You could put the 5 EMA. It's just gonna hug your prices tighter. I use the 10 EMA, instead of drawing a trend to contain the trend. So that shows me the strength of a breakout as long as we're still that side. Okay, but good question. Thank you very much. Thank you, guys. Appreciate it. Marlon, thank you, sir, for hosting us. And we will see you all next week. Bye-bye.